War, sanctions, rising oil prices, and COVID. Through all these, US stocks have seemed stable. There was a sell off last week, but it didn't last long. The fact that our economy hasn't completely collapsed yet is beyond amazing. But why? What is keeping it afloat? I have 3 reasons in mind, and knowing each one could help you with your future investments. Number 1, people are spending more than they are getting scared. Talks about a consumer-led recession have been bubbling as inflation crushed spending power. Walmart and Target's missed targets made investors retreat, but other retailers have since come through with better results. Macy's went up almost 20% in a day. Personal consumption expenditure in April exceeded forecast. Simply put, people are spending, which triggers economic activity. Number 2, investment campaigns. Each time the market is down, social media blows up with an age-old investment mantra: buy when it's low. And it is finally starting to work. Number 3, the impression that the worst is over. Investors think inflation might have peaked. There is nowhere else to go from here but up. There were even a couple of outlandish suggestions from the Federal Reserve about pausing and eventually cutting rates after a speedy set of rises this spring and summer. Expectations for lower rates because of a weak economy aren't beneficial enough to offset the damage to stocks done by the threat to profits. But these expectations are changing how the market responds, and this is great for stocks. This means easier money without any threat to the economy. Here is the real issue, though. The stock market staying afloat is all because there is no bad news, not because there's actual good news. People think the worst is over, so they feel confident about spending again, but the confidence won't sustain us. At some point, the economy needs to actually get better. The GDP has to increase. We need to solve our energy dependence on certain countries. We need to bring manufacturing back home. Pay has to rise enough to sustain spending without generating yet more inflation. We can't continue with this poetry. When it comes to the economy, words are cheap, and it will be a long time before we see whether the Fed is truly prepared to brighten up the stock market. This has been AnnaKhait with Noble Gold News. Make sure to like, subscribe to the channel, and make sure you click on the notification bell to be alerted with all our news and updates.